going on, everybody? Jeremy Ritz here. Courage pays better than fear trading. The day after U.S. tariff implementations, we are seeing a major fall in the markets. Down at one point today, around 240 points on the SPX. And I wanted to put together a video in which we go back and look at when this first happened in Trump's first administration. And in 2018 was when there was announcements about tariffs. So I wanted to share that information with you and go back and look at the charts from that time period to see what played out, what happened, how that impacted the SPX, fears of a trade war, and how long that it took to recover. Now, obviously, every scenario is different, but having some historical context can help us understand what is happening as we speak. So let's check it out. So the last time we saw Trump implement tariffs like this, we have to go back to his first administration. And if we look here, the lead up, the U.S.-China trade war began in 2018 with tariffs on solar panels and washing machines, of all things. That started January 22nd, 2018. And we're going to look at that date on the chart to see what followed. And what came after that were tariffs on steel and aluminum. And then that led to escalating and multiple rounds of tariffs on Chinese goods starting in July of 2018. And we could see here, it says by mid-2019, negotiations with China had stalled and it prompted further action. And it led to fears of a trade war. But what exactly happened and transpired after that implementation of tariffs on January 22nd, 2018, and what does it look like on the chart? So let's go check that out and see if we can find any commonalities between today and what's occurring and what happened in the... So here we are looking at the SPX, and I have an arrow pointing to that January 22nd candle from 2018, and this is when those tariffs on China were implemented, and we could see kind of looks similar to what we saw in February of this year, 2025, where we were up near all-time highs, and that's really where the bottom started to fall out on the market. And we could see that after the announcement of those tariffs, the market did push up a little bit and then reached a peak here, and then you had a bearish Harami candle here on the daily chart. That's a bearish candle inside of a bullish candle body. And then what we see is just a significant drop here. And let's just go ahead and measure this out from the high here of this candle down to the low of this wick. And we can see that that's 11.84%, almost a 12% correction that came down, and it found some support there off that 200 SMA on the daily, and then found some relief and pushed higher. But that wasn't the bottom, because what we saw was continued volatility in the year of 2018. And notice that it didn't regain highs there in February. And remember that more tariffs were implemented in March. You did have a further sell down, found support there on the 200. And then it began to climb higher, and it got back up to those highs. Let's see here, August 18th. So if we just measure out how long it took to get back up to where it fell, it took 210 days. So it took quite some time for it to regain those highs. And we could see that even though it continued to push up and it did make new highs, what happened? We had additional tariffs announced, and then we had a very significant drop from there. And this is where fears of a trade war intensified with China, and the drop from this high here that was made on the SPX, and that's Friday, September 21st, 2018. Let's go ahead and measure this out. Down to its low, we're looking at a 20% decrease. Now, remember, if you dip below 20%, you enter bear territory. Now, it didn't go much further than that, and obviously this dip was bought up, and then this was heading into 2019. We pushed out of here, and then we know what comes in 2020. That was COVID with that big drop, but then we rallied out of there. So just looking here at this historical precedent, We definitely are in store for volatility because we're seeing that with this 2008 tariff announcement, almost a 12% correction, and then just kind of sideways chop movement. And it took 210 days for it to recover, but then there was more volatility where it dropped again 20%. So potentially we could be in store for something like that with these new tariffs taking place. We'll have to see what type of retaliation is going to be in store there from these other countries. But the one thing to think about is that the tariffs just aren't going to negatively impact the United States. They're going to impact the global economy. And so other countries understand that. You're seeing a lot of negotiations happening right now, alliances being built, new alliances, and there's going to be a concentrated common effort to try and resolve this because it's not good for anybody's economy or anybody's market. So that's what we have to watch here over the next several weeks is what sort of resolution comes out of this, if any, or will there not be a resolution? Will this just intensify? Will the trade war intensify? And will we see the markets come lower? And remember, we got close to 12% here today. But in order to get to bear territory, we have to get down here below 20%, which we are significantly away from. So there's still lots of room for this thing to fall on the broader markets. Again, that next leg of support there is the 100 SMA on the weekly. But regardless, these are exciting times in the markets in terms of what is happening. And we will see how this plays out over the next few weeks. So there you have it. There's a look at what happened with tariffs back in 2018. What are your thoughts? Where do you see the market heading after the implementation of these new tariffs? Do you see new deals being worked out? Do you see people coming to the table to find some type of common understanding, agreement, resolution? Or do you think this thing is going to get worse before it gets better and potentially we head down to bear territory? Let me know what you think down below. And check out the recent video I did on the SPX potential price targets over the next few months where we could go, especially with the new round of earnings coming out. That is it for today's video. This is Jeremy Ritz. Courage pays better than fear trading. Make it a great day.